Imagine you wake up on a Monday morning, your alarm rings, but this time, something feels different. Before you even get out of bed, money has already arrived. A dividend payment, interest from cash savings, rental income, investment growth, a distribution from a fund, a business investment paying you while you slept. And for the first time, you look at the number and think, this is more than I made at work today. That is the dream. The moment your money earns more than your labor, the moment your investments stop being just numbers on a screen and start feeling like a second paycheck, the moment you realize your financial life is no longer built only on waking up, commuting, working, and waiting for payday. But here's the question most people never calculate. When does investment income finally beat your day job? My name is Edwin, and welcome to The Wealth Shift. Today we are talking about the real math behind investment income, not the fantasy version, not the social media version, not the make money while you sleep version that ignores the years of saving before that happens, the real version. Because investment income does not beat your day job because of magic. It beats your day job when your capital becomes large enough to produce meaningful income or growth without your daily labor. That one sentence matters. Investment income is not mainly about wanting freedom. Everyone wants freedom. It is not mainly about choosing the perfect stock. It is not even mainly about watching the market every day. It is about building enough invested money so that a reasonable return on that money can compete with what your job pays you. Let's make it simple. If you have $1,000 invested and it earns 5% in a year, that is $50. That is not replacing your job. If you have $10,000 invested and it earns 5%, that is $500 in a year. Helpful, but still not freedom. If you have $100,000 invested and it earns 5%, that is $5,000 in a year. Now it starts to matter. If you have $1 million invested and it earns 5%, that is $50,000 in a year. Now the conversation changes. The percentage did not change. The base changed. That is why investment income feels weak at the beginning and powerful later. Most people quit mentally because the first stage feels too small. They invest $200 and expect to feel wealthy. They invest $1,000 and wonder why life has not changed. They invest for 6 months and feel disappointed. But investments are not designed to impress you in the beginning. The beginning is where you build the base, and the base is built through savings rate, income, discipline, time, and consistency. The first stage is the boring stage. You are still working, you are still paying bills, you are still saving. Your investment income may be tiny, maybe a few dollars, maybe a few cents, maybe nothing visible yet. This is where many people say, this is not working, but it is working. It is just not big enough yet. A small tree does not give shade, but that does not mean it is useless. It means it is still growing. The second stage is when investment income becomes noticeable. Maybe your investments pay enough to cover your phone bill, then your internet bill, then groceries for a week, then your car insurance, then part of your rent. This stage is powerful because you start to feel the shift. Your money is no longer silent. It is starting to speak. It is starting to help. It is starting to reduce the pressure on your paycheck. But it still does not replace your job, not yet. The third stage is when investment income begins competing with work income. This is when your portfolio, rental property, business investment, or cash flowing assets produce enough income that you can compare it to your monthly salary. If your job pays you $4,000 a month, then investment income beating your job means your investments produce more than $4,000 a month. That is $48,000 a year. Now ask the real question, how much capital does it take to produce $48,000 a year? At a 4% income or withdrawal rate, you would need about $1.2 million. At 5%, you would need about $960,000. At 6%, you would need about $800,000. These numbers are not promises, they are simple examples. Returns change, taxes matter, inflation matters, risk matters. Some income is not guaranteed, but the math teaches the lesson. If you want investment income to beat your job, you need a serious capital base. That is why the first goal is not quitting your job. The first goal is building the engine, and the engine has 4 parts. The first part is savings rate. Your savings rate determines how much money you send into the engine. If you earn $4,000 and invest $100 a month, progress will be slow. If you earn $4,000 and invest $800 a month, the engine grows much faster. If you increase your income and keep your lifestyle controlled, the engine grows faster again. This is why spending discipline matters so much. Every dollar you spend can give you comfort today. But every dollar you invest can become part of the machine that buys your freedom later. The second part is time. Time gives your investments room to grow, but time only helps what you actually invest. People say, I believe in compound interest, but then they do not give compound interest enough money to compound. Time Time is powerful, but time alone is not enough. You need time plus capital. The third part is return. Return is how fast the engine grows. Stocks, funds, bonds, cash, real estate, business ownership, and other assets all have different risks and returns. Higher returns usually come with higher risk. Lower risk often comes with lower return. The goal is not to chase the biggest number blindly. The goal is to build a strategy you can stay with, because a plan you abandon during stress is not really your plan. The fourth part is reinvestment. This is where many people slow themselves down. When investment income is small, they spend it. A dividend comes in and they use it for shopping. Interest comes in and they treat it like free money. A small gain appears and they cash out too early. But in the early stage, reinvesting is powerful. Reinvestment keeps the engine growing. It means your money earns money, then that money joins the team and starts earning more money too. That is the snowball. But the snowball needs to stay together long enough to gain weight. Now there's another important point. Investment income can beat your day job in two different ways. The first way is cash flow. This is money that comes to you directly. Dividends, interest, rent, business distributions, royalties. Cash flow feels good because you can see it arrive. It feels like income. The second way is growth. This is when the value of your assets increases over time. A stock fund grows, a business becomes more valuable, a property appreciates. Growth may not feel like income immediately, but it can still build wealth. Some people focus on cash flow, some focus on growth, some use both. The right mix depends on your goals, age, risk tolerance, taxes, and personal situation. But the principle is the same. You need assets. Assets are what can pay you when you are not actively working. A paycheck pays you because you showed up. An asset pays you because you own something valuable. That is the difference. A job can be a great tool, but a job usually stops paying when you stop working. Investments can continue working when you rest, but only after you build them. That is why you should not hate your job. Use your job. Your job can be the funding source for your freedom engine. Your paycheck can buy assets. Your raises can increase your savings rate. Your bonuses can speed up your timeline. Your skills can increase your income. Your stable income can give you the base to invest consistently. The mistake is depending on your job forever without using it to build anything outside the job. That is the trap. Working for income is normal, but never building assets means you must keep working for income indefinitely. Now let's imagine the path. At first, your investments pay almost nothing. Then they pay a bill, then they pay several bills, then they cover a week of living expenses, then 1 month of expenses per year, then 2 months, then 6 months, then 1 day. Your investments produce enough to cover your whole lifestyle. That is the real turning point. Investment income does not have to beat your salary first. It has to beat your expenses. That is a major distinction. If you earn $8,000 a month but spend $7,800, freedom is far away. If you earn $5,000 but live on $3,000 and invest the difference, your freedom engine may grow faster. Financial freedom is not only about replacing your income, it is about covering your life. The lower your required lifestyle cost, the less investment income you need. That is why lifestyle control is powerful. If your life costs $10,000 a month, your investments need to work very hard. If your life costs $3,500 a month, the target is much more reachable. This does not mean live miserably. It means understand that every permanent expense raises the amount of capital required for freedom. A bigger lifestyle needs a bigger portfolio. A simpler lifestyle needs a smaller freedom number. So when does investment income finally beat your day job? It happens when three things come together. Your savings rate is strong enough to build capital, your investment base is large enough to produce meaningful returns, and your lifestyle is controlled enough that investment income can catch up. That is the formula. Save more, invest consistently, reinvest early, control lifestyle inflation, increase income when possible, build assets, give time, and keep going when the early numbers look boring, because the boring stage is not wasted. The boring stage is where future freedom is purchased quietly, one paycheck at a time, one investment at a time, one reinvested dividend at a time, one avoided lifestyle upgrade at a time, one patient year at a time. Then one day the numbers start getting louder. Your investments cover a bill, then several bills, then a month, then many months, and eventually your money begins competing with your labor. That is when everything changes, because you no longer work from fear, you work from choice. You do not stay because you have no options. You stay because the opportunity still makes sense, or you leave because your assets have given you room. That is financial power, not showing off. Not pretending to be rich, not quitting recklessly, but building enough assets that your life is no longer fully controlled by one paycheck. So today, do not only ask, which investment will make me rich? Ask, how much capital am I building? Ask, what is my savings rate? Ask, are my investments growing, or am I constantly interrupting them? Ask, what does my lifestyle cost? Ask, how much investment income would it take to cover my life? Those questions will tell you the truth. Investment income beats your day job when your money has been given enough fuel, enough time, and enough discipline to become a worker of its own. Until then, keep building the engine. This video is for education only and is not financial, tax, legal, or investment advice. Everyone's situation is different and investment income can be uncertain, so make decisions carefully and seek qualified guidance when needed. We post a new video every day on the Wealth Shift, so subscribe for everyday financial lessons that help you avoid money traps, build better habits, and grow real wealth. Shift your money, shift your future.